my interest in working with physical gold fund begins with the name, the word physical. As I describe in my book, The New Case for Gold, there's a big difference between investing in or owning physical gold versus the many, many kinds of what I call paper gold. So what do we mean by paper gold? Well, you have ETFs, exchange-traded funds. These are securities traded on the New York Stock Exchange. You can buy them just like you buy a share of IBM or General Electric. What do you get? Well, they take your money. It goes into a trust. The trust buys gold. The gold is stored. Query whether all the gold's there all the time. There are some leads and lags. They are allowed to use what's called unallocated gold. I don't want to get too technical, but the point is you don't own the gold. You own a share of stock. And if the New York Stock Exchange is shut down, which could either be in a financial panic or it could be the result of a cyber financial attack by the Russians, you can't trade those shares. So you may think you own gold. You have some price exposure, but you don't really own gold. Same thing is true with lots of other paper gold transactions. Gold futures are futures contracts or derivatives contracts. You don't own the gold. You say, well, I can buy a futures contract and take physical delivery. My advice is read the rule book of the exchange. There's a rule that says they can change the rules. So if you want physical delivery and too many people want it at once, the exchange can actually say, sorry, you have to what's called trade for liquidation only. You can get out of your contract. You can get your profit and loss in dollars, but you can't get your physical gold. Same thing with a lot of other gold contracts. The large bullion banks in London, they'll sell you what's called unallocated gold. Unallocated gold is a euphemism for no gold. In other words, you buy a gold contract and it says you own a certain amount of gold, but they can take a certain amount of physical gold and sell that gold 100 times over. So let's say they have a ton of gold, they can sell 100 tons on an unallocated basis. So what happens if the holders of the 100 tons all show up at once and the bank only has 1 ton? Well, in theory, the bank could go out and try to buy it, but good luck. You might be in a full-scale buying panic at that point, and the gold might actually not be available. They're not going to steal your money, but they'll write you a check for yesterday's closing price, but you won't actually get the gold. So again, the attraction of physical gold fund is that they have real gold. You invest with them, they take your money, they buy gold immediately, no lags. They put it in safe storage in a vault in Switzerland, and there it is. It's not, by the way, it's a non-bank vault. This is not a bank like UBS or Credit Suisse or Deutsche Bank that can be shut down by the regulators or they can seize the gold. These are private, secure logistics firms, secure storage firms. So you've got a non-bank vault. If you want your gold, call them up. They'll send you the gold, no questions asked. So you can have it in your own custody if you want, or leave it in their vaults if you like. That's up to you, but there is physical gold behind it, not leveraged, not oversold, dollar for dollar. So obviously I like gold as part of a portfolio, but I recommend physical gold. I talk about this in my book, The New Case for Gold, and that's one of the things I like best about the physical gold fund. I've had the pleasure of working with the Physical Gold Fund management team for a number of years now. It's a great group of individuals. I like them individually and I like them as a team. One of the things I like best is that it's a very international group. So you've got Americans, you've got Australians, you've got Latin Americans. I like that. It brings what I call cognitive diversity. When I talk about diversity, I'm not talking about kind of ethnic diversity, but just different ways of thinking about things. So that's one of the things I like. I like the international flavor of it. And individually, I say it's not good enough to do the right thing. You have to do the right thing for the right reasons. And this is the team that's doing it for the right reasons. Of course, it's a business, and they like to make money, and that's fine. That's to be expected. But they genuinely care about investors. They genuinely care about preserving wealth. They genuinely want to offer a solid product that lets people preserve wealth in all states of the world. So I like the geographic diversity, the cognitive diversity. They're just great guys. I've had the pleasure to work with them, not just in a business context, but socializing and going out for dinners and lunches in different cities around the world, and got to know them very well. So I like them personally, I like them professionally. They're doing the right things for the right reasons, and I think one can definitely have a lot of confidence in this team, as I do. Another thing I like about the management team at Physical Gold Fund, they're very seasoned. I mean, there's nothing wrong with being younger or new. I'm actually very enthusiastic about the fact that it's not just older folks who are interested in gold, or people who've been around or maybe remember the world before 1971 when the world actually was on a gold standard. But I'm very encouraged by the fact that there are a lot of younger people in their 20s, early 30s, millennials, who are revisiting gold. Maybe they didn't learn a lot about it in college because their professors didn't tell them, but great thing about the internet, they're discovering it on their own, kind of self-educating, if you will. So a lot of younger people are interested, but the team at Physical Gold Fund, they're seasoned. They've been around. They've seen ups and downs. They don't get too excited if the price goes up or down on a given day. They understand this is a long-term investment, long-term way of preserving wealth. So in addition to all of their talents and all their motivations, as I say, doing the right things for the right reason, I like the fact it's a seasoned and experienced team. One of the things that most impresses me about Physical Gold Fund, and that I think does differentiate them from some other products, is their attention to detail. You know, long before I got involved in the gold market or studied gold in a monetary context, I had done it in an academic context decades ago. But most of my career, until about the last 10 years, was spent as a lawyer in the securities and derivatives business. And of course, as a lawyer, you learn to pay very close attention to detail, dotting the I's, crossing the T's, and so forth. That was my training, my background, and my instinct, my experience. So when I look at other people's performance in business, I ask myself, are they paying attention to detail? And in the case of the Physical Gold Fund, the answer emphatically is yes. The first thing I did after meeting the principals was to look at their network and their contacts and how they handled gold. I don't know if many people know, but there's something called the London Bullion Market Association. These are the big banks that run the gold market, but they have what are called good delivery standards. You just can't show up with a truck and say, here, take my gold. That gold has to exist in a certain physical bubble. When I say bubble, I'm talking about a network of approved dealers, approved vaults, approved secure logistics providers. Secure logistics, these are armored cars, people who move the gold around, and approved size in terms of what is a good delivery bar, approved refineries. There's a whole long list. So, for example, whether it's Argo Heraeus or Johnson Matthey, as the case may be, certain refiners are approved. Whether it's Loomis, Viamat, or Brinks, certain vault operators and armored car operators are approved. The banks, Citibank, Goldman Sachs, et cetera, as the case may be. So, and the delivery size, the standard 400-ounce bar. So all these things matter. If you get gold in that system and you keep it in that system, meaning you can move it around, but it's always with one of these approved firms, one of these approved vaults, one of these approved banks, et cetera. That's always what's called a good delivery bar, which means that if you need to sell it, it's no questions asked. That system will take that bar off your hands. There's always a market for the gold. The problem is if you get outside the bubble and put it with, you buy it from a refiner in China who's not on the list, you put it in a vault, say in Dubai, that's not on the list, et cetera. Once you get outside that bubble, that system, if you want to bring that gold back into the system, you have to really start from scratch. You have to have it assayed and tested, and it's costly and expensive and time-consuming. So when I saw how Physical Gold Fund had set up their structure so that the gold always remains in that approved system, even though they have control over it, it's their vault. They have possession on behalf of the investors, and they can deliver that gold to you if you want. But because of that kind of attention to detail in terms of selection of counterparties, contracts, understanding the system, I was very impressed with that. As a lawyer, that's the kind of thing I look for, and I found it in the case of the Physical Gold Fund.